Worldwide markets this week. Amazon, Johnson & Johnson, both looking good for investors. Do we have a budget? Time for an S&P 500 bounce, but Liberation Day looms. Commodities quietly having a good year, and Atlanta Fed GDP Now update. This is Worldwide Markets, episode 625 for 2nd of April. Recording it on Tuesday midday. I'm Simon Brown. Worldwide Markets, powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. Shift now also with JC shares, but I'll be chatting with their boss. We'll drop it into the feed that coming out late on Friday. Let's start to kick off with the S&P 500. We have had a bit of a sell-off, but Monday's trading was perhaps interesting. It started really, really bleak and then managed to close green, not by a heck of a lot, although 30 points. Nasdaq not so much, but S&P, a nice bit of a recovery there. Now, one day does not make a week. We could see some more upside here. It's all going to depend on what is happening on Wednesday. And Wednesday is the self-proclaimed Liberation Day from President Trump, where he's going to be imposing tariffs left, right, and center by all accounts. Just tariffs, and more tariffs. So we will see. I suspect he's probably going to pull or walk back some of those. Certainly that's what we've seen so far in these, a little over 2 months of tariff wars since his inauguration. And if that's the case, there's our move for a run higher in the S&P. But ultimately, I think we've probably still got about another 10% down, taking us to around 5,000 points, because, Trump will maybe walk back some of the tariffs that will give the market something to get happy about, and then something else will happen. Notwithstanding, we came into the year with U.S. markets very expensive. So, not massively surprising in that regard. So we'll see. Time will tell. At this point in time, I certainly think that markets are looking for a reason to bounce, and that tariff could be it. But I think a little more downside wouldn't be the worst thing in the world. It's absolutely to be expected, and I think probably good, if nothing else, for valuations is certainly true. We had our latest Standard Bank Power Hour on Monday evening. Effective offshore investing, US CITES tax, touched a lot around the different ways to get offshore. It's not all about taking money into dollars or euros, whatever the case may be. And then CITES tax, how can we minimize it? How can we get around it? Ultimately, we need to pay tax. JustOneLap.com/Power Hour. And our next event is going to be on the 15th of May. We're taking April off because of all the holidays. We're looking at trading as a side hustle. We're doing details on derivatives. So 3 weeks ago, we had our postponed budget. We're now going to vote on it. And by media reports, the ANC doesn't yet have the votes to get it across the line. The coalition government without the DA is 200 votes. That's enough, but they don't have all the other members, and they would need some other parties perhaps to come to it. MK EFF saying thanks, but not us. We saw it with the formation of the Government of the National Unity. That deal was actually signed while Parliament was in recess. They had sat for the swearing in, and then they did a recess and signed it during the recess. So going down to the wire is, I suppose, what negotiations are about. What happens if we don't get a budget? Well, we just keep next year's. Our government doesn't shut down. It would be politically very bad. It would be economically very bad if it were to not pass. Of course, the flip side is that if it does pass, it really does say a lot about this Government of National Unity, and most notably the DA and the ANC, to kind of make things work rather than just always be, fighty and complicated and the like. So we will see. We will find out on Wednesday. Until then, my sense is it's going to pass. But that's just because I'm expecting politicians to do the right thing at the very, very last moment, which is very much what politicians do. It's just not a great place to be as citizens. And of course, there's always the chance that the politicians decide ultimately not to do the right thing. So it could get messy. We will find out on Wednesday. We'll get some more information. Let's have a quick look at the GDP now. I've been covering it the last couple of weeks, ever since it went horribly negative. We had an update on 28th, which was Thursday, that being March. What they've introduced now, so the March 28 update was minus 2.8% for Q1 GDP, but they're now saying, and that's down from 1.8 on 26 March. This thing moves fast. But they've now got an alternative model forecast, which adjusts for imports and exports of gold, and this then takes it down to an expected 0.5% negative GDP for Q1. Not half as bad, still negative, and even if not negative, floating around the zero level. What matters here is that, and you can go and read the report, just go Google Atlanta GDP Now, you'll find the link, and they've got the update on gold. They say that they are overcounting and the like between gold, and they're trying to clean it, so this is looking cleaner for them. I'll take them on their word for that. We will see how that plays out, but the short answer is it's still looking somewhat ugly. I want to look at some of the, actually, no, before I go to there, let's go to some, one of my watch lists. What we're seeing here is the commodities. And we know that gold is having an excellent year. No one is surprised by that. But commodities, more generally, are having a decent year. I spoke last week around copper and rhodium. They respectively 26.5% and 24.5% green for the year, each of them. Gold's up 19.5%, coffee's up 18%, gasoline 14%, platinum up 13%, palladium up 10.6%. The CRB Index in of itself is up 5.4%. There are some negatives. Oil, not much, 0.5% lower. Aluminium, uranium down 11%, coal down 17%, cocoa down 30%. Iron ore is flat for the year. A quiet little bit of a commodity run happening here. And this is, frankly, really, really interesting. And I want to have a quick look-see at how our Satrix Resi is therefore seeing. Obviously, this flows into the miners. If we look at the lows of Jan last year, it was at 50. It's now at 72, so it's around 40% since January of last year, not this year. If we look at the lows of January this year, we were 54, and now we're at almost 73. And that is for close Monday, because I'm not looking at live data here. So we're suddenly seeing a nice little run in commodities, not a storming run, but that has a couple of implications. The first is it's good for our rand, and we can kind of see it. And our rand, for all the chaosness, has been relatively steady. So certainly nice for our rand. Rand is holding on, and it does suggest to us that if we continue to see a little edge higher in commodities, good for our rand, good for our balance of trade, broadly just good for our tax collections, just good for our economy. Now, let's be clear, this is not yet a mad rush by any stretch of imagination. This is not things going crazy, but I think it's certainly something I'm keeping an eye on. Let's put it that way. There are also a couple of US stocks I want to have a look-see at. The first I'm going to touch on is Amazon. We all know Amazon, nothing new about that. Down to $190. It's down $50 from the high of earlier this year. So it's off, what's that, some 20+% down. It is, the 190 level is on my charts a double support. So that's an important level. A couple of things from Amazon. The first is, well, what about, quite simply, the fact that tariffs? Tariffs aren't directly going to hurt Amazon, right? Because what you've got here is they do manufacture some of their own products, but most of what they sell are from third parties, which they then sell on their side. So they're just going to have to pay more, and they will sell more. They'll just pass it on to the consumer. So in fact, revenues go up because of tariffs, and we don't know what, where, or how those tariffs are, but revenues actually go up, and they therefore make more commissions. Now, because of tariffs, what we're probably going to see, things are more expensive. People simply buy less. But from a chart perspective, it's looking quite interesting. If we look at some of the other data, so the historic, the PE is 34, which for Amazon is actually the lowest we have seen in a decade or more. So the PE is looking quite chunky. The mean PE is 132 over the last decade, but that's because Amazon's had some crazy times. So I'm not worried about means. Forward PE is 30, which, as I say, for Amazon is as low as I can recall seeing it. In fact, the more we zoom out, the more that just actually remains true. EV to EBITDA, earnings before interest taxation, depreciation, and amortization. Again, at lows, down at 15.4. That's lower than it's been in a decade or more. Forward one is 12.3. Price to book at 7.1. It was a little bit lower in 2023, but what you're getting here is that trend where the numbers are all basically saying, you know what, Amazon is about the cheapest it's been in about a decade, and in some cases longer than that. Now, I'm not saying Amazon can't fall further, but if we're looking for an opportunity for a company like Amazon, I think it's worth having a look at. The analyst consensus is a low price range of 203, average of 264 and change, and a high of 306. It is trading 190, so it is below that low average. Although, truthfully, it tends to stick to around about that low average and then run up higher. But there's a lot saying here that maybe in the 190s, or maybe it goes a little bit lower, that Amazon is looking attractive. If it does go a little bit lower, there's sort of support all the way down to 180. And I've never owned Amazon. I've never massively given thought to owning Amazon, but I'm suddenly thinking to myself, it looks like there might be something here. And Amazon is an absolute beast. It's Amazon, which we all know, that's the buying stuff online. It is AWS, Amazon Web Services. We all know that. They win in AI because they've got the web services and they can do compute power, et cetera, et cetera. And then it's advertising, which has been a sort of slow little bit of a creep up, which I've never fully appreciated until you realize how big it is. And what I mean by that is that you can advertise on Amazon.com. So you're selling a product on Amazon.com. I don't know, widgets. And I go search for widgets, and you can put a paid advert in front of me on Amazon.com. I was unaware until recently how giant that really is for them. So here's a lot of the others. I think of Apple, and I think to myself of Apple, they kind of, I don't want to say they're ex-growth, but growth has absolutely slowed. Services is great, but hardware is doing it tougher. Who knows around tariffs and consumers under pressure? Whereas with Amazon, well, you're not going to buy that product because it's expensive, but there's a B-grade product and it's cheaper. So you can simply switch. Whereas with Apple, you switch to, I don't know, something else, a Samsung, whatever the case may be, a Lenovo or something. I'm getting my brands all wrong, but you get the sense of what I'm saying in that regard. Tesla, I'm not particularly interested in. NVIDIA, I've got some NVIDIA there. But I think, Microsoft, interesting, but I think Amazon really is the one that I'm particularly excited about there. And then another one, which is a stock, and disclaimer, I own this particular stock, Johnson & Johnson. We all know Johnson & Johnson. We also know it is an immensely boring stock with respect to Johnson & Johnson. They keep on running into challenges. They've had the problem with their talc powder more recently. The stock has moved up to around the 165 level, which is a resistance zone. 140, which dates back to 2021, is a support zone. It might break. I don't think it is. I think it's probably going back to 140. Why do I like it? Because it's consumer focused. I get that. It'll get hurt by tariffs to a degree. Absolutely, it will. And consumers under pressure is not going to be good for for Johnson & Johnson. I get all of that. But it is a dividend yield of 2.99% on Monday's close. If it can drop that, $20 and get back to the 140 area, which it has been trading in forever and a day, if it drops that, $25 to get back to 140, quickly got to do some difficult math. It makes that dividend yield around 3.5. Dollar-based dividend yield 3.5. You can then get some upside from the stock, although it has been sideways for a number of years. But there's not many 3.5% dividend yields out there. And that's really what makes it, to my mind, very, very attractive. It's priced to book at 5.6. It's been edging lower. It's been as high as 7. In the last decade, it's been sub 4. EV to EBITDA, there it is, kind of mid-range. EV sales, kind of mid-range. And the price earnings, we get some really dirty data on the price earnings. So if we take the forward price earnings at about 15 and change, it's slightly on the low side. There's a lot here that says, even at the 190, 165, never mind it getting back to the 140 level, it's looking attractive. Analysts' expectations are mostly bullish, 13 holds, 7 buys. and 2 strong buys actually, so mostly neutral. It is a low price of 150, an average of 169, and a high of 190. As I said, I think that 150 is possible. I own some. I'm going to put some more orders in at around 150. I just like that dollar yield of sort of 3%. And of course, it'll grow on your base price that you've got today. So a great stock, which I like, and a stock that is just looking at this point in time, I think, quite cheap, quite very, very cheap. And that certainly is going to be, I think, really attractive for boring investors. As I said, this is not NVIDIA. This is not setting the world on fire by any stretch of imagination. Quickly, while I'm talking the likes of NVIDIA, remember those F&B ETNs that they've got? And they started with NVIDIA and some others. More recently, they've come out and bought a whole bunch more, Palantir, Novo Nordisk, etc., etc. I got to say, I really, really like these as a concept. Yes, these are shares that you can buy on New York or wherever the case may be. You can't put them in a tax-free account. We've got Airbnb, Broadcom, BlackRock, LVMH, Novo Nordisk, Palantir, Disney, and ASML were the new ones that have come through. They have them with or without currency, either a compo or a compo or a quanto, and you can pick whichever you like. The question folks always are saying, well, why would I buy it here when I can buy it offshore? Ease, it's in your JSE. You might not have offshore monies. The compo at the end, if it's a C, includes the impact of the exchange rate. If you think the rand's going to be strengthening to, I don't know, wherever, then maybe you take the quanto, which excludes any currency move. You can get more information, justonelap.com/ETFs. As I say, there have been 3 tranches of them that have come through. And I like the concept. I'm holding the NVIDIA one. It was a pre-election hedge last year, because if the election went badly, the rand would collapse and I would get money from that regard. And I wanted to hold some NVIDIA, so I did it particularly in my ZAR account. If you're saying, you know what, I've got an offshore account, what on earth would I want with this? Well, then it's not for you, and that's totally fine. Let's not get overly carried away in that regard. If it's not for you, then that's how it is. But for the right folks, I think it has a space. I absolutely think it has a space and a nice product. And I like the innovation. That's always what excites me. Let's get some innovation going. Worldwide markets powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. We'll leave that there for this week, coming in slightly early on the minutes, but that's fine. April is a crazy month with holidays and stuff, but pretty much we're going to be going through the whole way. I record Tuesdays, and there are no Tuesday holidays, so no excuses for me. So until next week, my name is Simon. Look after yourself, and if you can, look after somebody else as well. Cheers all.